Well, that was a day so far. You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Surabhi here in the studios. Nigel, of course, joins us from the newsroom floor. Guys, hi. Good afternoon. It's a quiet day. Absolutely quiet day. It's a small range day as well so far, unless, of course, things change in the next 60 minutes of trade. So that's what we are looking at. Nifty is still treading water around yesterday's high. I mean, actually, it's come off a little bit in the last 15 minutes or so of trade. Broadly, we are around yesterday's highs. 17,863 is the level we've kind of hopped on, and that's the level to really take out if the market wants to open upsides for itself. That is the recent swing high. The Bank Nifty is also absolutely flat, and that index needs to take out 42,965 as a level. And like yesterday, I think it's all about large moves on individual stocks. Some actually are a repeat of what we saw yesterday. So take a look at IPCA, take a look at Crompton, continuing to sell off. On the upside, you've got a whole new set, which is all these Gujarat-based public sector companies, which are flying away. We put the spotlight on all of those in a bit from now. Reema, hi.
Hi, but on the whole, the earnings picture, right, since that's the big driver, hasn't been so bad. Of course, we got that shock off from Infosys. A couple of the other large cap IT numbers were dismal. But outside of that, over the weekend, ICICI Bank, Reliance Industries were pretty solid. IndusInd Bank was a decent set of numbers. Overnight, take stock of the numbers that we've had, and you would see that there are more earnings hits than misses. So KPIT Tech numbers just came out, look good. Mahindra CIE has surged post its numbers. Tata Consumers opened flat after that 5% up move that it had yesterday, but since then it's built on the gains. And Tata Consumers, after a strong set of numbers, is up close to about 1.5%. Bajaj Auto was at a fresh 52-week high yesterday, so from that level it sold off, but the numbers per se, the margin improvement has been liked by the street. And Poonawalla FinCorp, also numbers just came out and they also look pretty healthy. AU Small Finance Bank, the numbers were pretty okay. Yes, there was a bit of a NIM contraction, but the numbers were pretty all right. So that you would call it as a stable or a neutral set of numbers. In terms of misses, you only have Rallis and Dalmia Bharat. So what I'm trying to say is that in the earnings picture so far that we've had more hits rather than misses. That said, the kind of drubbing IPCA Laboratories and Crompton is seeing for the second day in a row, they're down 15%, and again, the fall is coming in on very, very large volumes, so there's no stopping.
Absolutely. I mean, whatever justification the management perhaps gave to analysts yesterday on that call for their purchase of what is essentially a loss-making company, 9 months, I mean, Unichem is a loss-making company, and they've sold off, of course, their domestic business. Probably not going down well with the street. It's very, very evident the manner in which IPCA has been reacting. But just to come back to the large cap screen, if you can pull up the contribution chart, why are things completely netting each other off? Because you've got some of the consumer names on the upside, earnings reactions largely, as Reema pointed out. So your Nestle and a stock like Tata Consumer there on the upside. But then you have some of the heavies. Look at Reliance, look at Kotak, look at ICICI Bank. They're enough to rein in any sort of optimism. Of course, we still have two sort of major numbers that we're looking out for. Bajaj Finance and FinServ, of course, they will be the ones that will be hitting the headlines. And then, of course, a slew of the life insurer earnings as well. So it's all very stock-specific, mood-driven, performance-driven. But otherwise, for the market as a whole, Nigel, it's been a very range-bound day, not really able to take out that congestion zone, 17,750 to 800, 800 to 825 thereabouts. Not convincingly able to cross that, at least right now.
Surabhi, at the start of the day, normally if you see red on the screen, you'll say, oopsie daisy, are we in for a bad day? I'll tell you what, if you're seeing red on the screen and the global markets are a little bit of a tizzy, it's actually good news. And the last couple of days, if you bought the day's low, well, you're making some money out there. So the buy on dips in the Indian markets, well, that continues. Now, it's testing your patience whether or not we can break out from here. But clearly, intraday, if you look at the Nifty Bank lows, well, that's up 300 points from the day's low. The Nifty as well is up 80-90 points from the day's low. So you get closer to around the day's low, you're playing for a bit of a bounce. Remember, on the downside, the 17,650, that's your stop loss. So in case you're going to lose out, well, you lose out on 50-60 points or thereabouts if you're buying, because that stop loss is in place. The Nifty Bank is the one that's showing some good traction. That's been the leader, and that continues to look quite good. Remember, tomorrow we'll have expiry that plays out, and on the penultimate day, you're expecting a bit of a move, but that's not really happened today. However, on the put side, there is good amount of writing. 17,750, 17,800 put. Between them, a whole lot of open interest is there. So that's again telling you 17,650, 17,700. At least positioning is such that that level should hold out. On the upside, anyone's guess whether or not we can revisit that 17,850, which incidentally is the recent high, closer to around the 100 EMA.
Okay, Nigel, thanks for that. The levels are set. The game is on. Let's see if we are able to take some of these out. How should